Okay, so what's happening here, guys? We are seeing markets slowly ease off. Asian equities has performed disappointingly. But before we go to anything, let us start with the big picture. So let me shift to our daily chart. And what do we have from the big picture? Of all the charts at this point, I am most interested in is what I'm most interested in right now is our euro. Why? Simply from the big picture, we finally have our euro with a daily close under 30.85. If we look at the 4-hour picture, we've triggered a head and shoulder pattern in our euro. So part of me is thinking, I think we are seeing the start of possibly another big sell-off in our euro. Now, what else do we find interesting? I also find interesting the fact that we've got our Japanese yen strengthening. So, what does that imply for us? If the Japanese yen is strengthening and your euro is dropping, then perhaps the currency pair of choice would be for people to be in euro yen. Simply with the yen strengthening and your euro, in fact even your GU, your euro, your GU dropping, that tells us that the yen cross may be even more bearish. You may even get more pips with the yen crosses. You're basically combining one currency that is strong and another currency pair that's weak, making it making it more likely to give you a decline. But since I'm more committed with EUR/USD trades right now, let us take a look at the EUR/USD first, and then we will shift to their yen crosses. Now, folks, if you have any other pair that you'd like us to go into, as usual, feel free to tell me about it. All right. What are the things that we have to remember? Today is PMI day, meaning we'll be getting PMI data out of the Eurozone, out of the US, out of the UK. We've already had one PMI data earlier. This one came from China. And although surprisingly stronger than expected at 50.5 for the official number, PMI according to HSBC was at 48.8. So there's a difference, and that difference told us that according to HSBC's views, manufacturing in the Eurozone, in China, actually contracted. Now, doesn't really matter much if you're a Euro trader, but I think that underscores the risk-averse sentiment that we are likely to face today. In the Eurozone, we will be seeing PMI data from the Eurozone later. The consensus forecast for this at 48.7, an improvement from the previous 46.9, but still a poor number. Still telling us that the sector is contracting. What else? Out of the UK, we have the CIPS Manufacturing Index. And here, again, your consensus forecast is below that 50 level. Consensus forecast tells us that a congestion, or rather a contraction, is expected from UK manufacturing. About the only place where manufacturing is not expected to contract is the US. US ISM manufacturing expected to turn out at 54.5, an improvement from the 53.9 before. Okay, so I'm just laying the basis for us to be able to compare the likelihood of a stronger economy story as we move on. Now let's move on to technicals and let's take a look at our euro. So what do we have in our euro chart? From the big picture, we saw a big black candle yesterday. We saw a nice long wick. More important for me was we closed below your 3085 price point. 3085 was the closest strong support that I had in my chart. With a break of 3085, the next strong support that I can see in our euro chart is all the way down here, your 2878 region. 2878, basically a double bottom breakout point in euro. Also a bounce off point since we had a pullback to that level and then we rallied from that level. Indicator wise, what are we getting? Mixed picture, bearish stochastic, MACD just getting started with stopping off. Now, we have a bearish bias from the daily level, from indicators and the candlestick. But when you look at your 4-hour picture, we have even more. In 4-hour charts, we triggered a head and shoulder pattern, okay? Which means that I should be looking for a sell-off all the way down to where? I should be looking for a sell-off all the way down to here, your 2925 region, just 30 pips, 35 pips away from your next key support level. We're talking about getting to a price level which is what? Which is more than 100 pips from current market prices. Okay, so we have we've got a bearish reversal pattern from our daily chart, or rather from our 4-hour picture, a head and shoulder pattern. Indicator wise, what do we have? If I look at my 4-hour MACDs, we are dropping. If I look at my 4-hour stochastic, we're in oversold territory. If I look at my 4-hour candles, we are seeing an expansion in the body size of our 4-hour candles. Okay, when you see those 4-hour candle body size getting larger, that's more sign for you that bearish momentum is building. Okay, what do we have here when we move into a lower time frame? Let me see the hourly picture. Hourly charts, we've got MACDs down. We have our stochastics with a bear cross. Our latest hourly candle may end up with a white one, but unless we actually get to rally over the next 21 minutes, I would point out that at the close of my latest 4-hour candle, which is at the end of this hour, we're likely to get a big black candle. So we are likely to say, hey, we are confirming that bearish momentum has developed. So bearish 4-hour picture, bearish hourly indicators. What does that tell me? At this point, I better be focused on a sell on rallies approach to the market. I find prices pushing near 3085. First thing that I should ask is, can I take a sell side? Can I jump in? Depending on where exactly we close the R, if we close below 3041, then that reinforces the notion of a bear market for us. Now, pattern-wise, we said that the target is all the way down to 29.23. But what about from the average ranges perspective? It's not as if we've seen our expected bad numbers already. Well, average ranges suggest that I can get 131 pips. We have our high for the day at 3086. So that means that we could still be talking about getting to 29.55. Not exactly your head and shoulder pattern target, but nonetheless, that's about 90 to 100 tips from where we are at the moment. Okay, so guys, looking at euro, we have a bearish view. We are topping out in our MACD. We have our stochastic dropping. When we move intraday, we've got a confluence of bears in the 4-hour and the hourly picture. All that we need now is really a good price. A good price is jumping in from just below 30.85. Or if not that, then you give me your hourly close. Give me an hourly close under 30.41, and I will argue a breakout is occurring. So folks, as far as euro is concerned, we have bearish indicators in the lower time frame. We have mixed signals in our daily indicators. But more importantly for me, we managed to push below 30.85. That daily close below 30.85 will cost your euro. That daily close below 30.85 would mean that we may be set now for a test of our 28.78 price point. Okay, let me move on. If there's any question again, folks, just feel free to raise it. Now, we said when we started that with our dollar yen selling off and our euro dropping, then that combination would probably mean that we will be better off shorting our euro yen, our GJ, shorting the yen process. So let us take a look at EUR/JPY next. See what kind of downside we can be talking about. Okay, first thing that I want to check is there room to maneuver in euro yen? With respect to average daily ranges, how much more downside can I get? Average daily range in euro yen is 103 pips. I've got highs for the day at 99.87. So we could be talking about getting your EUR/JPY down to 98.84. Indicator wise, where can we find a strong support? Well, just like in your EUR/USD, I'm thinking double bottom breakout point would serve as a nice strong support level. I'm thinking 98.82. Working rate right now is at 99.39, so we're talking about maybe a 50 to 60 pip move towards your strong support area. Average ranges suggest that we can get 98.84. So it looks like we've got a sort of a perfect fit here about just how low we're expecting things to get. So from the daily picture, we have our MACD stopping off. We have our stochastic pushing for oversold territory. We haven't seen, or we've only seen about half of average daily ranges. We can get some more. Move to your 4-hour picture. And what are you getting? You have a bearish MACD. Your Stochastic is oversold. Let's check the hourly chart, and well, I guess in the hourlies there's no sense of urgency. We have MACDs below the signal line right now, but they're mostly flat. We have stochastics actually trying to generate some form of bullish divergence. So there's no sense of urgency as far as jumping the sell side is concerned. But I'm thinking we can make good use of your 99.62 level. Okay, so folks, as far as euros again, euro yen is concerned, this to us is a, well, let me just say that I'd want better pricing. I want to take the sell side, but I prefer doing so from just under that 99.61 region. Alternative for you is to use a break of 14.65, a break of 99.15. But if you do that, you'll probably be giving a good chunk of the likely sell-off already. Okay, guys, any questions so far? Anything you'd like us to look into? Anything you'd like to share? Again, right now your euro pound's flat, your USD JPY is dropping, your dollar pairs for the most part are risk averse, so we tend to think your yen crosses will be where the action is. GU is actually selling off at the moment, so that means GJ should also be among our options for today. So let's take a look at what we have in GBP JPY. And what have we for GJ? Look at this from the daily picture, and it looks like we are trying to push below our EMA lines once more. Let me drag some fibs in our daily chart, and what is so significant about this? We find ourselves testing the 50 fib level. 50 fib level, EMA lines, you just give me a close below under it. And well, gold, as far as euro is concerned, I think we are now seeing the start of our next big down leg. GU, we're looking for a clear sign that we are turning around, that we have a top already. Okay, so let me, after GJ, we'll examine GU. So, key thing for me in GJ, can we push below 1966, your 50 fib retracement level? Give me a close under it, and I'm thinking well, not really a big move because you have a moderate support at 61.8 fib, your 1910 level, but you have an excuse to be bearish. For our charts, we have MACDs down, we have stochastics also dropping. Candlestick wise, we're actually seeing a bearish breakout at this point. Guys, what's the plan here? Your daily charts are poised to generate a confluence of bears. Your 4-hour chart is a confluence of bears. Your hourly picture. When we find our stochastic oscillating around the 20 area, we normally view that as a sign of a bear trend. So to me, I'm thinking just take me below our 50 fib level. Just give me an hourly close under your 1966 area. And we have an argument to take the sell side. Our objective would be to get to your 61.8 pips, your 1910 price target. Of course, big picture, we could be talking about a bigger sell-off here. Big picture, we could be talking about trying to push to new lows in your GJ. Okay, let's take a look at EU and GU. Let's take a look at GU. So what's the overriding trend in GU? The important thing for me in GU is this. When I look at this chart, we've had a failed attempt to push above that strong resistance level at 57.74. For a while yesterday, on an intraday basis, we were above 57.74, but we did not hold above 57.74. So that strong resistance, which started working from late November, early December, remains inviolate as far as the big picture is concerned. It has managed to hold against the daily close above it. Now, that's not necessarily a big bearish signal immediately, but it does tell you that bulls have lost control of the market. Indicator-wise, what do we have? Despite generating new highs yesterday, we were already doing we already had a bearish divergence in the stochastic. We were already beginning to come off the overbought territory. In 4-hour chart, what are we seeing? Well, once more, we have a confluence of bears. We need something though. We need something that would tell us, hey, your rally is really over. Expect a bear market to get started. For that, I've got two candidates. Either you give me a daily close below 56.98, or we just take out your previous pullback low. You just take out your 53 price point. Now, what are we getting from signals? Confluence of bears in the 4-hour level. No patterns as far as the candlesticks are concerned. From the early picture, we're oversold. We've got MACDs dropping. So, we are bearish. The preferred place to look for a sell would be coming from just below your 57.42 region. We could aggressively take the sell side if we actually manage to push below the 63 price point, your 23.6 fib level. And let's review that euro. So again, I think of euro as oops, that's the wrong profile. I think of euro as among the more bearish of our pairs. We finally saw our pullback target, your 38.2 representation. We've been looking and looking for that for weeks. We finally had it last Friday. Indicator-wise, you've got a bearish bias out of your stochastic. Your MACD is beginning to top off. From the 4-hour level, you've triggered a head and shoulder. You've got a confluence of bears. Hourly more of a mixed picture for now. What matters for us is this. You got yourself rejected from 30 to 44. You managed to see a daily close below 30.85. Because of your daily close below that 30.85 price point, our focus now is on a push down to the next strong support at 2878. Now, again, as far as euro is concerned, gold, you should be able to join the room. You just have to log into the forum, and from the forum, you should have access to that. If you're having trouble, send me an email, and I will see what I can do. Okay, try sending me mail, and I'll see what I can do for you. Yeah, cause I'll be giving away an EA not an EA, but a custom indicator for candlestick identification in our room. Okay, let me get back to overview, guys. So any questions at particular chart you'd like us to look at? Any concerns? Why don't we take a look at our Aussie, Kiwi. Okay, let's take a look at Kiwi. What do we know happened? Earlier in the trading day, we saw some disappointing numbers out of China. Well, disappointing in terms of the gap between the official PMI data and that from HSBC. Okay. Official data says that Chinese manufacturing came out in an expansion mode above 50. The unofficial HSBC version came out with a 48.8 read. So that tells me that commodity currencies are at risk of losing ground. Now, what do we have in Kiwi? Big picture, we actually managed to close above 82.43, a strong resistance level. Technically, that should pave the way for your Kiwi to rally further. That should pave the way for Kiwi to really make a run for the 88.70, 8900 level. If you look at your weekly chart, it even represents a potential double bottom breakout point. So we are well resisted, but we have managed to push above that 82.43 region. Indicator wise, we've got a bullish MACD, a bearish stochastic. From the candles themselves, there's a bullish bias given yesterday's close. Move to the lower time frames, and what are we getting? We have a mixed view. Your stochastic is about to give you a bullish crossover. MACD is still dropping. Candlestick wise, we are seeing a lot of mixed candles in the 4-hour picture. A lot of indecision in the 4-hour level. Hourlies, let me check. More mixed signals. Now here's what I'd like to point out. 80.43 was a strong resistance level for us before. Now that we're back below it, I'd like to stay under it. So I'm using the fact that it's a strong resistance level as an excuse for looking for shorts. So mixed signals well resisted in the hourly. Bearish bias in the 4-hour picture. There's no sense of urgency about taking the sell side. your latest 4-hour candle, in fact, may be considered as a hammer, may be considered as a bullish reversal, although you can't do anything because of 82.43. Well, gold, there's just so much money right now. And again, from the dailies, we're seeing mixed signals. So for me, I'm not in a hurry, but I won't be in a hurry, but if we continue to see repeated failure in the attempts to push back above 82.43, I'd look at taking the sell side. Maybe wait for your stochastic to head back to oversold territory, and then you can argue that you're getting rejected from a strong resistance level. You can argue time for a bear market, at least 81.55 for a price target. You push below 81.55, that's impressive. Take out 81.55 and likely your ultimate objective would be your 79.97 region. Sure, Susan. Um, Fundamentals no longer move the market. Basically, it's a question of liquidity. If you guys remember, last December, there was this LTRO by the ECB. This means that the banks in Europe have a lot of money right now. Okay, it's like the case that we had with the US during QE2. There's just so much money that the stock market just kept pushing higher. We have a similar situation right now in the Eurozone. The banks have a lot of liquidity that we can't really get a textbook response to economic data. Okay, the central banks, wherever you go right now, all have a tendency to just lower rates or to keep the rates low. So this liquidity is impacting the normal relationship between economic data and what we actually do with our trade. As far as the bond question is concerned, I think that pretty soon that bond issue would be over for us. Once the rollover issue gets resolved in Greece, it will be a while before bonds become a problem again. All right, Aussie, excuse me. What are we getting? Again, Aussie, we find ourselves just below a strong resistance level. We don't have a clear reversal pattern from our candlestick. Nonetheless, you have a bearish divergence in your daily stochastic, you're topping off in MACD. So, you're actually at risk of getting a bear market going. Quite frankly, I'm surprised by the way Aussie has managed to rally over the last, over the course of the year, actually. I tend to think, once again, reason behind this, liquidity that the ECB has introduced. So much money in circulation chasing only a finite number of commodities. Policy-wise though, we would point out that the RBA is an easing cycle. I think all we need to get is weak economic data out of China, and we will see our Aussie reacting to all that's been happening. So, mixed daily indicators, bearish bias from indicators, mixed daily candles. Move to the lower time frames, and what are we getting? A mixed set of signals. Your stochastic has crossed up, your MACD is pointing down. What else? You could argue that you have a triple top. Breakout point for your triple top is all the way down here at 100.52. Hourly, what do we have? More mixed signals once more. So, I see no reason why people should be in a hurry to pull the trigger on a sell. However, you take me back just under your key resistance level. You push me back just below that 165 region, and we can call for a nice sell by then. Maybe one that would take out that 4-hour double top. So Susan, my bias is to the sell side, but I don't think it's appropriate to jump in. Not right now. Not at the moment. Okay, let me get back to overview. So guys, questions, comments, complaints. At this point, we may be at the start of what could be the next big down leg. The euro seems to be leading the pack, but we could just as easily get our Aussie to sell off, our GU to sell off. Dollar CAD, sure. Let's take a look at that. Well, what do we have in dollar CAD? From the Fundi perspective, we have a risk-averse market now. So dollar CAD from a Fundi perspective should be going up. Technically, what do we see? Mostly indecision from the big picture. But you have a bullish daily stochastic, you're bottoming out an MACD. So we're looking for the possibility of actually rallying up. In 4-hour charts, you've got MACDs up, you've got a bear cross and stochastic. So mixed signal. Candlestick wise, we don't have any clear pattern to work with. So this is one chart that I'm beginning to hate. Hourly, any excuse for an upside breakout. Hourly level, we have stochastic with the bear cross. We've got our MACDs flat above the signal. So to me, no sense of urgency, but given the overall bias, I'd say look for a bounce off your 10019 area. So I guess no immediate action, but willing to go buy on dips. Ultimately, your objective would be getting a close above the 10070 price point. Once we've managed that, we can be a lot more bullish and a lot more aggressive about taking the buy side. Once we've managed that. Alrighty, folks. Any questions? So, again, overall view for us is risk averse, but we're not in a position to take any immediate action in the market. I'd rather wait for better pricing, and from better pricing, try to join again. Alright, folks. Comments, questions, complaints. Going forward, we don't really put a lot of importance to today's data set. ISM used to be a big market moving event, but ever since the crisis started, your ISM numbers has taken a back seat. Okay, folks. I guess if there are no questions, I'll just thank you for joining this session. And I will be back tomorrow. Again, if you're having trouble in accessing the live trading room at FX Instructor, feel free to just send me an email. All right. I guess I'll see you tomorrow, guys.